Hello traders, it's Thursday, March 10th, and here is the New York Session Market Review from WMoptions. As discussions about Britain's exit from the Eurozone become more and more vocal, even the Queen has been drawn into the fray. Today, the palace issued a complaint against Rupert Murdoch's Sun newspaper for misleadingly reporting that the Queen favors the Brexit. A spokesperson then clarified that the Queen remains neutral. Meanwhile, yesterday's figures from the UK show a mixed picture of manufacturing beating expectations, but a drop in the energy sector. This morning saw housing price increases rise a bit, and investors expect tomorrow's trade deficit widening. Elsewhere in the Union, the euro continues to fall against the US dollar in anticipation of additional easing from the central bank. Traders expect not merely an interest rate hike, but additional quantitative easing as well. Bloomberg reported this morning that the euro has been named the world's worst performing currency of the month, having lost 3% to near parity with a greenback. In Brussels yesterday, the European Commission warned Spain, Belgium, Italy, and 3 others that their overspending of public finances should be brought back under control. If ignored, these countries could face a very stiff fine. Asia saw mixed trading overnight as most equities rose on hopes of ECB stimulus and a short uplift in oil prices. In China, surging food prices over last month's Lunar New Year holiday helped push up inflation at a 2-year record rate. Food rose by 7.3%, the CPI by 1.8% from January. The producer price index, on the other hand, fell by nearly 5%, so worries about deflation have not yet been extinguished completely. Japanese shares also benefited from oil prices, with the Nikkei 225 rising by 1.3%. But the biggest overnight surprise was New Zealand cutting interest rates by 0.25% to 2.25, pushing the Kiwi down to 66 cents to the US dollar. As for oil, after hitting a 2016 high yesterday, U.S. crude dipped back down again after a huge drawdown was reported in the EIA's crude oil inventories report. 3.88 million barrels was a welcome relief from last week's reading of 10.37. And finally, gold was on its 3rd day of retreats as investors awaited today's ECB decision. No major changes expected, but gold is still 17% ahead of where it was at the beginning of this year. Still ahead, we're waiting to hear from the European Central Bank on upcoming monetary policy at 1:30 p.m. GMT. At 7, the U.S. Treasury will publish its monthly budget statement, and at 9:30, Business New Zealand will be publishing its Purchasing Managers Index for February, which should be interesting in light of last night's rate cut. That's all for now. Come back again tomorrow for WMoptions London Session Market Review, and until then, have a great trading day.